What's up, guys, and welcome back to Rougefx. Today I'm coming to this platform with some special knowledge. Feel free to take what you need, implement it within your own personal trading plans. Hopefully improve, hopefully see profitability, hopefully see a glimmer of hope or maybe even a breakthrough. This is all theory based, just to really kind of just quiet out the loud ones that be on YouTube. Just it's all theory based. So if you don't believe it or you don't believe this to be true, this, that, and the third, that's on you. That's your personal belief system. It doesn't matter. Belief systems are just that. It's literally your preference. I mean, how you decide to look at the world and view the world around you is very much your responsibility, right? Before I get started, be sure to hit that like button, subscribe to the channel, because we do post very much consistently, or really as consistent as I, care to, because if I'm being honest, this industry doesn't necessarily take this business too seriously, or at least, within the public. So it's kind of just hit or miss. If you get it, you get it. If you understand, you understand. Those who will get it will get it. Those who don't won't. And that's I'm very much fine with that. Today we will be going over basically the establishment and the hunt for liquidity. Essentially, we will be exposing range trading as well as the quote unquote QM or Quasimodo. I do very much go over this concept. I do very much encourage you to check out that video if you are in the least bit confused. Link will definitely be in the description below. Without further ado, let's get started. So of course, as depicted within our previous video, previous series, previous uploads, it is important to understand that the basic form of a QM is it's going to essentially look like this. And there's going to be very much two halves of this QM. Price will establish its range, in whichever case, this being a range high, a range low, and based off our current perspective, strong high, weak low. So basically the theory of this concept is price establishes its range, retest for internal risk liquidity, as well as a point of interest, continue towards the lows, or external risk liquidity, pretty much continuing the range cycle. But what happens when price stops at, in quote unquote, whichever case, internal range liquidity, price retests, mitigates a point of interest towards the left, continues towards the highs. Fulfilling this inducement towards the left, price decides it is a pretty significant area, reverses, provides us with a bit of a corrective behavior, continuing towards the lows, liquidating a POI as well as liquidity towards the left, and continues towards the highs. What happens when this happens? And this is like, and I very much don't want to confuse anyone. These are all moves that can very much potentially happen within the market. Everywhere that price stops, there is very much, liquidity being presented as well as magnetized. You feel me? So in a certain extent, all these moves are probable. All these moves are very much, in whichever case, these moves can definitely happen, is what I'm trying to say, right? Why? Because there's liquidity present. And where liquidity is, the market essentially moves in that direction, or tends to move in that direction. What happens when this low is no longer in whichever case, weak low, but an equal low? Would this make this liquidity grab valid? FU candle valid? Whatever, however case you want to name these, it's really all the same thing. But again, it's your personal trading plan, it's your personal trading journey. So with that being said, it really doesn't help to implement someone else's bird name or nickname of any kind of concept, because it overall is just going to confuse you. But that's besides the point. The overall idea of this illustration is to let you know that the markets are very much going to move in the direction that it wants to, right? We are but a passenger on this train, and it's going to keep going. Regardless if you are with the direction, regardless if you took this short and made profit, or maybe you held and didn't, necessarily secure that profit, take this short and then you end up losing. Understand that there is a reason for these things. There is a whole entire reason behind the markets moving in this way. Range trading is to range trading is to help you create more of a systematic approach. It doesn't guarantee profitability. However, for those looking to increase their win rate, for one, looking for a significant edge, two, as well as looking for a strategic plan for, of course, managing risk efficiently. Now, you can definitely think of the market within ranges, and to an extent, I still very much do. So, just getting started officially. The markets are made up of a series of liquidity grab and mitigation sequences. Liquidity grabs being our protected highs or lows, of course. Mitigation representing the overall liquidity within the range being presented. Here's where we realize where the most or the bulk of our stops, buy stops, sell stops, are actually located. I'm going to be depicting a few illustrations so you can understand visually what I'm actually trying to get across, and then we will go towards actual market data so I can very much prove that these things very much take place. There is a reason for the market movement within each range. Therefore, if you are very much given a set of rules and are very much told that these rules will lead to a certain outcome, whether that be 75% win rate, 80% win rate, 90% win rate, understand that that's what you will get, essentially, eventually. However, practice very much beats theory every time. So, of course, it's going to take that effort. It's going to take those months. It's going to take those years. It's going to take that time to develop, hone, and really kind of shape your craft as well as skill set and make it yours, right? Because this is Forex trading. This is a business. You essentially are investing the time, effort, and energy into acquiring skills that help you create opportunity within, in whichever case, a $6.6 trillion market. And let's be honest, 1% of $6.6 trillion, understanding within a lifetime, and I'm talking for very well seasoned traders that understand what it actually takes to really do this. It's enough, is what I'm saying. So, of course, as y'all very much did see on my previous illustration of, what a QM essentially is or could be in regards to my previous illustration, understand that I have grown. I have very much done my research. I very much am not the same person I was not even yesterday. Therefore, it is important that you understand and really kind of accept my evolution, accept my way of being, my way of thinking, as this is the only way I know how to be, right? So essentially, we're going to start off with our QM. We're going to continue our trend towards our second QM. We're going to retest internal range liquidity and continue towards the lows. Now, what I want you to kind of understand and really take in is I didn't necessarily make this QM look like this QM, only because one, these things are fractal. On the lower time frame, you'll see this same pattern right here. On the higher time frame, it looks like this because what's happening is this is performing a liquidity grab, in turn establishing our protected high. Towards the downside, you can very much tell that price very much created a liquidity grab as well as provided a shift in momentum, retested, mitigated, keyword on mitigated, a point of interest towards the left, continue towards the highs. Reaching for what? Internal range liquidity? Yes, that is fine. What I want you to really kind of pay attention to at this point is external range liquidity and understand that, or in whichever case, what price is essentially doing before magnetizing towards this significant point of interest and or mitigation. Essentially, price ran internal range liquidity, which happened to be what? If not this imbalance close price action, if not this fairly obvious order block, if not these series of weak highs, which are all very, these are possible scenarios that can lead towards, market movement, of course. But it is important to also understand that price is definitely taking out liquidity and breaking structure towards the lows. Again, taking out liquidity, breaking structure towards the lows. And when you understand that, you understand the actual definition of fractal, the actual definition of an infinite way of being or infinite way of doing things, meaning thinking of these markets in contingents or contingency, pretty much depending on a certain circumstance or because of an action, a certain reaction is going to happen in contingent to really itself. When you understand that, you understand why mitigation sequences are essentially the bulk of liquidity. This mitigation sequence or this return to supply or return to demand is simply a slanted low, a type of liquidity. A three candle formation, a type of liquidity. Very much for the sake of time, we're going to move on to the next illustration. It is important that you very much watch this a couple of times. You're not going to get the first time. You might not even get the 30th time, but that's not the point of watching these videos. The point of watching these videos consistently is that you implement this pattern within your mind so deeply ingrained as well as rooted that it becomes something that you don't even have to think about. It's like a certain intuition or intuitive notion that you get about each setup that you continuously take, which is very much the same setup every time. The same way you bought this setup is the same way you sold this setup. Liquidity grab. Liquidity grab. Now, moving on to our next illustration. Many times we will have a type of price action that it just looks it's just, I guess you could call it a healthy trend. But a lot of the times price will very much leave that weak high, rate it, will have, in whichever case, a change of character, a shift of momentum, this, then a third, price will retest, mitigate a point of interest as well as liquidity towards the left, continue towards the highs, rebalance, which I mean can very much come from a liquidity void or very much come from a form of a fair value and continue towards the lows. Price stopped at this particular price area, level, price. It really just depends on really whatever you want to call it. Price establishes a series of weak highs. Whether it fulfilled them entirely or not, price still left a series of weak highs. And really, just to not confuse too many or anyone in that case, this is literally just maybe like a 4-hour bearish rejection block. Price provides a series of weak highs and again, as well as weak lows, which were eventually ran. However, for some reason, price decided that this was a pretty significant area to stop, liquidate, shift, and mitigate. Price retests, takes out a significant amount of weak highs, finds support along, in whichever case, you can call this an imbalanced close price action. So essentially, a liquidity grab continues towards external range liquidity. It's important to realize the type of liquidity price is reaching for, potentially, of course. It is also important to realize that after internal range liquidity is met, external range liquidity is very much targeted. Whereas external range liquidity, other than this mitigation sequence, could very much act as a mitigation, slanted lows, or three candle formation. Moving on, again, for the sake of time, a lot of the times, your protected low just may be a weak high. We get a decent drop within price. A weak low is established, which is ran. Price continues, leaves essentially a weak high, retest, essentially rebalancing price from, obviously the previous break of structure, leaving a weak low, liquidating that low, filling in price, and continuing towards external range liquidity. It is important to understand that this is very much a liquidity grab, which is establishing this as our official strong low. If this is a strong low, this must mean that this high is potentially, or more than likely, weak. I want you to ask yourself something. I want you to do something for me real quick and imagine all of the traders that took this short. I want you to imagine all the traders who took this short, whether it filled in or not. I want you to really kind of understand and really kind of realize all the traders who might have taken this short, all different series and forms and types, however you want to, of mitigation. Now, I want you to take away the actual point of interest, right? Your quote unquote order block, and find the types of liquidity within and really kind of just understand where you're shorting from. I didn't do that specifically for the first two so I can help you kind of understand what you're missing out and what you're kind of neglecting as far as your trading processes and really kind of the logic you use to assume your market directional biases. Moving on to our next illustration, we have a significant down move, maybe a rejection block. Price retest creates an ascending channel, starts to form a bit of a consolidation. We start seeing a lot of hesitation and ultimately down movement. I want you to ask yourself. It's funny because it just hold on. I want you to ask yourself, where is the bulk of liquidity within this depiction or illustration? Now I want you to ask yourself, where would you take your entry? Be honest with yourself. Would you take this short entry or this short entry or this short entry? Or would you take this mitigation opportunity? Now ask yourself, where's the money? Where are the bulks of these stops? Buy stops as well as sell stops. Now, I want you to kind of really kind of depict what your range will look like. Of course, you're going to have to do top-down analysis, quote unquote. It's not that complicated, guys. You're looking for the same pattern every time. If this is where your mitigation is, this is where your liquidity is, where does that make your protected high? Your protected high is the only high that's essentially doing anything, essentially taking out liquidity. Where's the liquidity? Where's your point of interest? Ask yourself, would you take this mitigation or would you take this liquidity grab? And ask yourself, where is this liquidity grab going? Where is this mitigation going? This mitigation is going towards internal range liquidity. This liquidity grab is going towards external range liquidity. Now, when you think about that, I want you to kind of understand the actual opportunity that you are letting instant gratification kind of hold you back from. It's not rocket science, guys. It's applying efforts and understanding that again, this is a business. This is it's a business, guys. Nothing's gonna be handed to you. Even this knowledge. Yes, you can have a brief understanding of something, but if you don't implement it on the daily, on the absolute daily, for at least 4 years, is it supposed to stick? Moving on. For those who are very much asking or very much thinking it, guys, liquidity grab, protected, mitigation, mitigation. You know, it's clear as day. Whether it be the whole entirety of the order block, the breaker, the fair value, the imbalance close, guys, you're comparing apples to oranges here. Understand that yes, these point of interest, they very much have key, I guess you can say prominent areas of volume that very much can be magnetized towards and very much used as essentially leverage, right? Because a lot of the times, I mean, these blocks will very much hold. Of course, at the end of the day, though, we can very much get a fair value gap entry, but at the end of the day, where is price continually going to go? Whether that be long term, and then eventually, or short term, and it's a break even. Understand that the actual mitigation of each of these setups that you find or think so highly of are simple mitigation. It's simply liquidity. So essentially, when you look at an order block or look for an order block or you see or say order block, understand that essentially you're setting yourself up to be liquidated because you didn't enter on a liquidity grab. You entered on a mitigation, which is essentially liquidity. Those are just a few forms As far as illustrations, those who get it, get it. Those who don't get it, I mean, you don't get it right now, but maybe sometime in the future you will. It sounds weird, but I'm not essentially speaking to the individual who is currently listening to this playback or this video. I'm talking to the future you that's put in a decent amount of work to very much understand how valuable this information is and how, if implemented correctly, it can leverage your entire life. Change your life. At this point, it's not about how bad you want it. It's really not. The information is free. The information is there. It's if you're willing to put in the work. Because the markets don't care about how bad you want it. There's a series of lessons, a series of experiences that you have to go through. This is forex trading. This is how you learn. How do you learn? You fail. They're going to teach you in school that failing means that you have to repeat the whole entire process all over again, which under the under a certain perspective or mindset you may have to, until you understand, until you wake up and realize you're not starting over. You're starting over with experience. You're not starting a whole course over. You're simply going back, understanding your mishaps, understanding your mistakes, and using them to advance further in your career. It's like playing a video game, guys. It sounds weird. It sounds, oh, this is not a video game. Bro, how do you learn how to, bro? What's the first thing you do when you hop on 2K, when you hop on Call of Duty, when you hop on, I don't even know what's out right now, that new Jedi game that came out? You, you, what are you doing? You're messing with the controls, trying to figure out what's what. It's the same thing. It's funny how a distraction can be so glorified, but actual, work put it in to your career to enhance you as an individual, to enhance you as as far as your self worth, as far as your net worth, that just seems to be an issue for some. And it could very much be, oh, it's my confidence. But even at that, because confidence can be built upon through experience. So really, there's no excuse. So before I very much go ahead and continue towards the actual charts or the charting of this video, there's a couple things I very much want you to understand about this quote unquote theory, right? Because it's all theory, all concepts, all rules, no matter what it is, guys, it's a theory. It's just what it is, guys. It's just what it is. Mitigation is the highest form of liquidity. What do I mean by that? Why did price retest for this quote unquote weak high? This high is weak, right? So essentially it's liquidity, period. But when you understand why price decided to mitigate, keyword mitigate, this point of interest towards the left, which just happens to be a breaker block, understand it's just price doing what it was looking to do all along, which was take out internal range liquidity, which happened to be what? Our mitigation sequence, guys. It's not coming towards a specific price or specific price level at that. It's more so magnetizing towards buy stops, which happen to derive right above our liquidity, which is not only acting as our weak high, as well as our official mitigation. Move this over so I don't confuse too many. In turn, liquidating, providing an official liquidity grab, right? So liquidity grab, the same thing as what's happening over here, liquidity grab, in order to continue towards the lows, in order to continue towards external range liquidity. Liquidity grabs tend to target this liquidity. What do I mean by that? Well, price didn't necessarily just rebalance off of a break and retest pattern. That's just what they tell you because it's to them it's the simplest way to understand this, which is it doesn't make sense at all. Because what is price essentially doing when actually establishing our essential weak high? It's retesting, taking out internal range liquidity towards the left, because there very much is essentially providing what? A liquidity grab. Notice how there's no retest and continuation, at least on this main time frame, quote unquote. Straight liquidity grab, continue towards the highs. Straight liquidity grab and continue towards the highs. In between is very much an imbalanced close price action, but it's really besides the fact. Because really, when you understand at a certain mastery degree, I don't want to say that to kind of just boast myself, but when you really kind of understand, guys, the only thing that's really happening in this case is a weak high being established and a strong high giving you a plethora of opportunity to continue to long. A weak high being established and a strong high giving you a plethora of opportunity to, again, long towards internal range liquidity, which, I mean, it has already shown its hand by its mitigation area. You know, we already know where internal range liquidity is. If you don't even know where internal range liquidity is, bro, if you see a mitigation sequence, you see an order block. Understand that eventually that's going to be rated. It's going to be liquidated. It is. No doubt in my mind. You know? It is important to understand as well that these mitigation sequences, they breed liquidity grabs. So when you see an area of mitigation being liquidated, understand that it's probably getting ready to take off, either up or down, either up or down. The last thing I really want you to get within this video, as well as far as this illustration, is liquidity grabs magnetized towards mitigation sequences. We have a liquidity grab, we have a mitigation sequence. We have a liquidity grab, we have, I'm really at this point, we have a mitigation sequence. We have a mitigation sequence. We have a mitigation sequence. I do appreciate you guys. If you very much did get this far into this video, I appreciate you guys for your time and very much, your attention. Moving on to our official charting. What's up, guys, and welcome back. We are now on an official trading chart, currency pair, of course. It doesn't matter which one. These candles are the same on every single platform. Not necessarily, but most definitely. The time frame as well as price, it doesn't matter either, because again, all these candles are essentially the same. They're the same on each pair. Therefore, if you don't know which chart I'm on or time frame I'm on, understand you probably haven't done enough studying, if I'm being honest, because again, it's all the same thing. I'm only choosing this or these particular setups because it's just easier to explain. As I explain this, you're going to understand why liquidity grabs as well as mitigations are so prominent and why they are so effective and why they are the markets in its entirety. I'm not here to dispel any kind of whatever the case. You can believe what you want. It's fine. I literally don't care. However, this is a new way of thinking, a new way of perceiving the markets. If you feel the need to, by any means, use any of the concepts that I display on YouTube, it's all for free. It's all just to better this community, which is, of course, is the Forex trading or any kind of trading community, really. Without further ado, let's get started. So first and foremost, we are very much presented with a liquidity grab, breaking structure to the opposite direction, of course, as well as a weak high, as in a bearish rejection block. With these bearish rejection blocks, especially when price, decides to get kind of weird and really kind of leave a gap within price, at that point, especially if it's like on, NFP week or something along the lines of news, what I'm going to do is I'm going to break that rejection block in half. At this point, you have TP1, 2, and maybe a 3 if you really care to hold. We'll adjust for educational purposes. Reiterating that this is going to be considered our weak high as well as our strong low. What I really want you to kind of understand or really kind of get what's actually happening within this consolidative nature, consolidative area is essentially it's just a build of liquidity, guys. It's not make it so complicated. What I really want to bring your attention to is this official liquidity grab, right? As you can see, we have a bearish rejection block. That can be very much used as our official, in whichever case, our block, right? Our official FU candle. This is our protected low. Now, if you transfer the orders from essentially the least amount of volume towards, in whichever this case, or, in the case of this second bearish rejection block, or in whichever case, the down move for the up move, however, guys, y'all want to call y'all's um, blocks, order blocks, dojis, however, it's literally the same thing. It's different characters. Mario, Luigi, not, no disrespect, understand it. It's literally two halves of the same coin, guys. They are, they do the same thing, you know? They are a point of interest that, when obviously returned to, should cause a significant enough reaction to where you can obviously receive any kind of return on your investment. I'm going to stretch this all the way out. As you can see, what Price did was very much textbook. Price went from its original point of interest. We had a bit of a rally or ascending channel, a lot or a bulk of consolidation, and then Price decided to retest or return to, in whichever this case, demand zone, and continue towards the highs. What did it continue towards? Internal range liquidity. I want you to understand where this move actually came from. I really do. I really do. Came from a mitigation sequence. This mitigation gave a false move. Instead, Price mitigated a bullish rejection block towards the left and continued what took well over 1, 2, 3, 4, 5, 6, maybe 28 hours, maybe, gave much more in a faster rate, in whichever case, 12 hours, a significant drop towards what? This mitigation, guys. This target that everyone bought, that everyone said, you know what, hey, this is a order block. You remember those? Yes, you saw profit. That's fine. But did it hit your target? Whether that be your quote unquote weak high, your any of your key levels. So either you were breaking even or you took a loss. Clearly. Let's talk about why. Why did this happen? What did Price do? As you can see, Price penetrated our quote unquote mitigation sequence and or, point of interest order block. Liquidated a fairly it's easy to miss, but it's a weak low. 3 candle formation, however you want to call it. So while, those who very much took this long, that, bred 4.4%, that, for a lot of people that held, you're stopped out of break even at this point, and they're trying to figure out if Price is looking to short. Instead, Price has simply performed a liquidity grab. Wow, my entry hit take profit. It's pretty funny how that works, guys. It really is. It is. It is. I promise you, it is. And I have another question. Where was the actual target of this liquidity grab? That's it's funny how that works, guys. Now let's talk about what happens after the fact. We get a significant reaction from our point of interest, in whichever case, a shift in momentum. Price retests, leaves or establishes a weak low. Now let's take a step back and realize what's actually kind of taking place here. What kind of liquidity is essentially located here? First, let's check the obvious. The obvious liquidity, which would be it's a rhetorical question, but I'm trying to make sure you're paying attention, because we already understand that mitigations are very much liquidity. Then it shouldn't be tough to understand why anything that's above or within this point of interest is liquidity, guys. So stretching this out, it shouldn't be hard to really kind of realize, understand, comprehend that this is a liquidity grab within itself. Now, my friends, I understand we didn't immediately up and hit our take profit, which essentially, yeah, we did. Yeah, we secured, if anything, more than the previous liquidity grab, way more. However, I want you to really kind of understand the possibilities of understanding this at a mastery level. Because it didn't come back from my entry. Eventually it did. I can tell you why as well. Eventually, yes, it came back. Why though? Why? Why would it come back? If this is liquidity, liquidity grabs breed mitigation sequences. Guys, what is this? Now I know, and this is what I want you to kind of understand is price will definitely use these mitigate, like they're valid. They're very much valid. But understand it's only a confirmation entry. At most. At most. So when price establishes a mitigation or quote unquote confirmation entry and you take it, or you say, well, we have a liquidity grab. I wonder if this will hold as well. And it does. Understand that you're not holding towards the outrageous highs. Instead, you're looking for, if not, your closest type of liquidity, a key level at least. A key level at least. Because it's coming back for it. Why? Because what's just below this mitigation sequence, guys? If not, and if not this slanted low, it's definitely coming for this three candle formation. It might as well at this point. It might as well. On the way, let me go ahead and take this liquidity grab, or in whichever case, I mean this ends up being most definitely liquidity grab at this point. But that's really kind of just besides the fact. But let me just sweep these through candle formation, sweep all these sell stops while you're at it, and then reverse to have people perplexed as to what's to happen next. Let me clean this up a little bit. Now, I want you to kind of go back to what I said before, being liquidity grabs essentially will magnetize towards mitigation sequences, right? So I want you to kind of understand what's kind of actually happening within this bearish rejection block. What's happening? That looks like a mitigation to me. And if anything, we have liquidity. So if we have a sudden shift in momentum, price closes as a rejection block and retest, or in whichever case, provides an official liquidity grab to let you know that price has definitely shifted character and it's not looking to continue higher because this is protected at that point, correct? Essentially establishing this as your liquidity grab, and we already know where the mitigation sequence is, or at least the most probable type of mitigation sequence. Because yes, this is a mitigation sequence, but so is this. And just below that mitigation sequence, there's a not only a three candle formation, but a slanted low. It really doesn't matter at what point, whichever point we do scale in, it doesn't matter, guys. Because, okay, price mitigates this bearish doji towards the left. As long as we're above our protected high, this and the third, we should be fine. Straight down to the lows. Take out this equal low. In turn, establishing what? Our official liquidity grab, guys. Now, as this liquidity grab is very much formed, we can very much understand that. What's next? What's our next mitigation sequence that's most probable to be hit? And why? Well, in this case of, just being on this screen, it can go as high as it really wants. It's not important at this point. But it would be this rejection block, this bearish rejection block, because it's mitigated already, took out liquidity, establishing its protected high, 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 all the way down to where liquidity grabs magnetize towards mitigation sequences. Essentially, very much the highs, yes. But the highest form of liquidity would be any kind of level within this mitigation series, even if it's all the way up here. Clearly, even if it's this unmitigated wick, Until next time on Jody FX, happy trading.